Okay, so you're saying, as far as you're concerned, hydroxide companies are the ones that investors should be looking at, because that's where this whole EV, mobile battery demand is going to be, addressing that high grade hydroxide. So my question to you again is, given that's your preference, okay, that's your preference, that's what your belief is. There's a lot of other lithium companies out there. Are you saying we should, in your opinion, ignore all those other companies because there's no money to be made? Or are you saying they all have some value but not as valuable as the hydroxide producers?
I would not say that the other companies have no value, but if you're an Argentine brine producer, and I know I watch a lot of your videos, and I raise money and advise a number of companies in Argentina and Chile. So, Lithium Power is, a company that we still advise. They have a Maracunga asset in Chile. They're waiting for, a deal with Codelco, right? And it's been taking a really, really long time. So that's a good asset. The world will need more brine assets. The world will need more carbonate, as well as will need more hydroxide. There's no question about that. Which project? There are a lot of projects. Picking the winners within the Argentine brines and the Chilean brines is a more challenging dynamic. Then, but Millennial Lithium, who you've had on the program, we've done work for, they're well capitalized. They still have the cash in the bank. They can wait, right? So balance sheet matters. Like if you're an investor and you're worried about dilution. So Neo Lithium has a lot of cash on the balance sheet. Lithium Power, like those three, Lithium Power, Millennial, and Neo Lithium are three companies which are good companies, good management, good projects, but waiting for how long, I don't know. Like the carbonate turn is going to take longer, in my opinion. Okay. And while that's turn you're waiting for, new things are happening. Like direct lithium extraction is, becoming interesting, and people are thinking about actually the strategies of Millennial and Lithium Power and Neo Lithium are still using conventional brine technology, right? So there is a bit of a movement. Like, why are you still using, that technology and not trying some of these other promising, DLE technologies? So there's a whole host of risks connected to brines in South America that make them more challenging, right? Like VW did a tour of the Atacama to see from a sustainability perspective if, it's okay. And they didn't say it's not okay, but they didn't say it's okay, right? They came out with a kind of a muddled opinion, like to be seen whether or not we're going to invest in South America. But on the other hand, VW and BMW have outwardly said, we're partnering with Ganfeng, and we understand getting lithium from hard rock is sustainable, it's scalable, so they're voting with their wallets and their verbiage. Okay. That hard rock is where these Western OEMs are going. So it's not to say, I don't see a quick turn. I could be wrong. Like I said this at the end of last year, and in January, all the Argentina, lithium stocks soared, right? Like in January, February, it was kind of game on. So if you're a contrarian, you could kind of say everyone hates Argentina, everyone hates, Chile, as a trade, okay, it may work. But the likelihood that you're going to see a strategic deal into those countries, okay, is lower than you're going to see in other assets in other countries. And if it does happen in South America, it's most likely going to be Chinese, in my opinion.
Okay, so let's talk about that. You've got players like Orocobre, SQM, producing some of the cheapest lithium, lowest quartile production costs, because it's brine. That's what it's known for. Brine is known for cheap. You're saying companies are now voting with their feet. In terms of this whole ESG component, you're saying the sustainability decision-making is going to outweigh funding decisions. There's all going to be a big component of funding decisions for brines going forward.
I'm not saying exactly what you said, okay? Because it's to be seen whether or not anyone's going to pay up for sustainability. I'm not saying that VW has said, I'm willing to pay more for sustainability, okay? What I'm saying is that hard rock to hydroxide is cheaper, okay? And they want hydroxide, okay? Brine to hydroxide is not cheaper, okay? So if you lay, and they want hydroxide, they don't want carbonate more, right? You know, I'm talking about Western OEMs for their cars outside of China. So layer on sustainability factors like do they want to deal with geopolitical risk? Do they want to deal with indigenous people risk? Do they want, to deal with, people, because it's not clear. The solar, how you're damaging or not damaging the solar and the water. And it's just, there's a lot of question marks about it that, but if it were definitively cheaper, right, then they'd probably look at it, more seriously, but it's not cheaper. And the cheapness also ebbs and flows, right? There are currency considerations, right, that are influencing. There are royalty considerations. There are export tax considerations. Like Argentina is not in good financial shape. So this is an export industry that they already put an export tax on, but because the peso, has declined in value, they're getting less hard currency taxes from that export tax. So the probability of raising an export tax in, the Fernandez administration in Argentina is high. So the predictability of the cost with a medium to long-term basis that, a VW or a Tesla, would want is very variable and unpredictable. So there's just a whole host of factors arguing against South American brine, for, Tesla, VW, European, American cars that people are driving, right? And there's a definitive appreciation for hard rock, but this DLE has suddenly become, interesting, intriguing. It hasn't attracted a ton of capital yet, but it's being looked at.